Odds are if you're taking this course right now, you're either brand new to trading or you've been trading for a while and you haven't yet reached profitability. If the latter is the case, I would encourage you to be open-minded to the idea of wiping the slate clean and building a new system from scratch. You can still use all the old stuff that you've learned and developed, but if you want to be able to build a new strategy that's more effective than what you're currently doing, the best way to do it will be to set aside your current system and start over from scratch. Whilst this course is focused on market profile or TPO charts and how to use them to understand the two-way auction process, I think the best place to start is just to go over how exactly a trader develops a winning strategy, a systematic way of consistently making profits. I call it the path to profitability. It's important to understand there is no one way to make money in the markets. Every trader is different. Everybody has a different psychological profile, different amounts of capital that they have to risk. Everybody's just in a different place in their life with different priorities. So the reason I think a lot of traders end up failing in this business is because they find one mentor or one person that they look to, and if that person's system doesn't work for them, they just give up. But the reality is you have to build a system from scratch for yourself that fits your psychological makeup and your personal situation. So just as like an absurd example to kind of play it out, imagine you got a guy who's just jacked, a big 250-pound dude who's like 5'8", and he's super fast, and he's strong and he's powerful, and he wants to be like a basketball player, right? He's probably not going to have that much success in basketball because he's not tall enough and he's too bulky and things like that, right? He just doesn't have any edge, any advantage in the game of basketball. But if he tried football, if he tried a different sport, he might be wildly successful. So that's a big part of what goes on in trading. You have to find the thing that fits you personally. The path to profitability is not easy, but it does work. You have to find the market that is right for you and build the system for trading it that is engineered for you. It is the hard way of learning to be a trader. It's much easier to just find an online guru and have them tell you what to do, but that won't work. Not in the real world. That only works for a small portion of people. Most people, if they're going to be successful in this business, they have to do it the hard way. That is what the path to profitability is. Step 1, market understanding. So the first step is discovering what market and time frame you want to trade in. There's so many options and they're all very different from one another. There's individual stocks, low cap stocks, mega stocks, there's stock indices, there's, bonds and commodities and Forex and cryptocurrencies and on and on and on the list goes. There's a ton of different markets to trade, and you can trade them on many different time frames. You can be a scalper who takes super quick trades. You can be a short-term trader who just takes little day trades, a swing trader who's sitting in trades for a few days to a few weeks. You can be a long-term investor who sits in trades for weeks to months, maybe even years, right? Those are all profitable systems. You can make money doing any of those, but it's a different psychological makeup for which one is right for you. And the first step is figuring that out. So how do you figure out what market is right for you? Well, one way of doing it is to find another trader who you relate to, whose personality seems similar to you, whose way of looking at the world, the way their brain works, feels like it's very similar to you, and then modeling yourself after them. You can get this from books like Market Wizard books or whatever, any books about trading. There's podcasts, there's financial news, you can watch interviews and stuff, there's YouTube videos. There's lots of different places where you can go looking for successful traders who you feel like you have something in common with, and then model yourself after whatever they do. The most difficult but most effective way to figure it out is just to try everything. Try trading lots of different markets on lots of different time frames and just see what fits for you, what feels right, what interests you. If you get super excited about cryptocurrencies because you love the technology and you love the way the projects are moving lightning fast and there's new stuff every day and that's what excites you, that's the direction you want to go. Or if you find that you like something like the S&P 500 futures where it's bread and butter every day, you just get in there and you just trade the exact same system day in and day out, maybe that's right for you. Maybe you like the large cap stocks. Maybe you like the low cap stocks because you like using a scanner and looking for opportunities all night in the charts and finding stuff. Whatever you connect with, that is the best way to discover the market and the time frame that's right for you. The first mistake that a lot of traders make trying to get into this business is they're in too big a hurry to make money. They think if I'm going to be a trader, I have to start making profits right away. But when you step into the market in a real way with actual capital, you are competing against the best in the world. Literally the brightest minds, the best algorithms and artificial intelligence, and just massive amounts of money put behind years and years and years of developing strategies that are specifically designed to take your money from you. That's what you're competing against when you step into the market with real capital. It's like trying to be a professional. You wouldn't want to learn how to play basketball by playing in an NBA basketball game. That would be crazy, right? You wouldn't want to learn to be a musician by learning to play an instrument on stage in front of a crowd. That's crazy, right? You wouldn't learn to be a surgeon by just walking into an operating room, knowing absolutely nothing and being like, let's perform surgery on this poor person, right? That's just not how you do it in the real world. That's not how you build complex skills. You have to start at the bottom and work your way up. So when it comes to trading, the way that works is you have to paper trade. You have to trade with a simulated account until you've learned to do it properly, until you've built a system that works. Then you step in with real capital. Step 2, system exploration. So once you've figured out what market you want to trade and what time frame is right for you, the next step is to start testing out different strategies that are traditionally successful in that particular market. Now you can discover these strategies again a lot of different ways. You can get them from books, you can get them from podcasts, you can get them from online courses like this or YouTube videos or whatever. And it doesn't really matter where you get the idea for the first strategies that you want to try out. You just want to try lots of different strategies, again, in a paper account, in a simulated account, and just see what works, what makes money, and see which fits for you. Which ones do you like? Which interest you? That system exploration is a really important part of the process. I literally tried trading everything before I discovered Market Profile. Like I tried trading every indicator you can imagine, candlestick patterns. I tried Forex, futures. I tried individual stocks. I did the low caps. I did the mega caps. And it wasn't until I'd gone through and figured out, oh, all these other things don't work for me, that I finally figured out what did. It's really important to understand in the beginning, your system cannot be purely discretionary. You can't just go long when you feel like going long. You can't just read markets and go with the flow or the feel of it. You have to have a systematic way of taking trades. When the market does this, you do that. And you have to do it every time following your rules exactly. Because that is the only way you can test the system over time to see how successful it is. It's also the only way you can develop it. It's the only way you can try tweaking this and tweaking that and see how you can make it better. If you're just going long whenever you feel like going long, you'll never improve. And that's not a way to be consistently profitable. So in the beginning, you start with a set of rules and you force yourself to follow them. Okay, so let's say, for example, you're trading the ES with the 15-minute candles and you're using the VWAP with the standard deviation bands on it. You might choose to start with a trading strategy like going long with 2 contracts at the VWAP and then taking profits at the first standard deviation or taking profits at the second standard deviation. Then you might see how successful that is over time. Trade it for a few days, a few weeks, and write down in your journal how successful that strategy is. Then you think to yourself, you're looking at the markets, you're watching it, and you're thinking, it comes back to the VWAP all the time, but it doesn't always make it to that standard deviation. So instead you decide, when it bounces off the VWAP, you go short 1 contract at the first standard deviation, short a second contract at the second deviation with your stop at the third, and then if it gets back to the VWAP, you take profits there. That's a strategy. So you just keep trying different things like that to see what ends up working the best, most effectively, and what you connect with the most conceptually. You can do this with chart patterns. You can do this with moving averages, with market profile references. You can do this with like literally any indicator that exists. you can use it this way. You just come up with a systematic way of trading it, and then you measure how successful that is in your trading journal. So when it comes to keeping a trading journal, you don't just want to track where you enter, where you put your stop, and where you take profits. You also want to track how many trades are winning and losing, obviously, how much P&L for each individual trade, how much risk you're taking. Are you getting in with 1 contract or 5 contracts, whatever the case may be. But then you also want to keep track of what's going on with you personally and what's going on with the market overall. So market-wise, you want to keep track of things like, is it trending or rotational? Is it compared to the norm, high volatility or low volatility? Is it high volume or low volume? Is it a day that has sort of even tempo, or is it really sporadic? Is it a slow, grindy, boring day, or is it a really, really exciting, the market is moving all over the place kind of day? All of those little random pieces of information can actually really help you develop a strategy. For example, you might find on high volatility days you don't trade as well, or on slow grindy days you don't trade as well. So you might decide that on those days you take the day off and you don't trade, or you trade with smaller size on those days, and on the days where it's the opposite and you trade better, you trade with larger size on those days. You can develop a system that's designed to fit your personal strengths and weaknesses by tracking what works and doesn't work for you, where you perform the best. The other thing you want to keep track of is your own psychology, right? Are you tired, or are you well rested? Are you focused, or are you distracted? Do you trust a trade setup? A lot of times when you're developing systematic trades, you have to take the trade because it matches your criteria, but you don't quite have confidence in it. It doesn't feel right this time. Track that as well. You might find that it has no effect on your win rate whether you feel good about the trade or not. And so you learn to ignore your own personal feelings and just trust the system. Or vice versa. You might find that on trades where you don't trust the setup, it doesn't feel right to you, you have a lot more losing trades. So then you can add your own discretion as part of the system, right? Does it match the rules of your setup? Okay, but do you trust it? Does it feel right? Then you enter, or you enter with bigger size on the ones where it feels right. Those type of things you can only develop if you track them on a daily basis as you're trading throughout the day. And then you go back and you study your trading journals at the end of every day or the end of every week, and you really analyze and look at what works for you and doesn't work for you. You will over time notice patterns that are just for you on what works best and doesn't, and then you can adjust your strategy so that you know you are always performing at your absolute best. Another great way to help develop your strategy is to talk to other traders about it. Find forums online where you can go and discuss what you're doing and what's working and not working. That's one thing I love about the Brigade. It's a place where you can go into the Discord and you can talk about your system, and other traders will give you their honest feedback. And maybe you won't agree with them. Maybe the feedback they give you won't really fit for you, but you can at least get some perspective that allows you to grow and develop your system. Step 3, self-understanding. Congratulations, you've done it. You've developed a winning strategy with a paper account that works consistently over and over. You feel confident about it, and you're ready to start trading with real money. Soon as you start to trade with your real actual capital, a whole new set of problems are going to arise. You're not going to be taking trades the same way. You're certainly not going to feel the same about them as you take them. One common problem that people have is when they get into a winning trade, when they see that P&L go green, they feel the urge to take profits way too early. They don't let a trade run as far as it possibly can. When they were trading with paper, it was no problem. Sit back, relax, let that sucker go. But when it's real money, they're, ooh, I got to take those profits real quick. So if you find that's a problem that you have, you can create rules for yourself to fix that, right? Maybe you enter with 2 contracts, and then when you feel that urge to take profits early, you only take profits on the first contract. Then you move your stop above break even on the second one, and you let that sucker run. Or maybe you just force yourself to set it and forget it, right? You learn that when you enter a trade, you put in your stop loss, you put in your take profit, and you don't touch it no matter what, no matter how you feel. Those type of little adjustments are very easy to make if you built your own system from scratch once you start to deal with the psychological difficulties of trading with real capital. So now that you know the path to profitability, how you develop a system, It's really just about being disciplined and forcing yourself to do it right, to build a system. Every trader I know that's successful started by mastering one particular market and one particular way of trading it. That's all you need. And then from there, over the years, you can develop and expand on it, right? You might start by just trading the S&P on an intraday basis, and then over time you learn to trade the S&P and the NASDAQ, or maybe you learn to take swing trades and intraday trades. Maybe you start trading individual stocks and the indices at the same time. But you want to build those systems one at a time on top of each other, and the basis is one market on one time frame and becoming an absolute expert on that market at that time frame. The most important reason that you have to develop your own system is because the market is constantly changing. Your life situation will constantly change. Your psychology will be evolving over the years as you trade. So if you just mimic some YouTuber or some thing you read in a book and you just try to do exactly what another trader does, what happens is as the market starts to change or as your life situation starts to change and your psychology shifts, you won't know how to change the system to match that. So it's very important that you build your own system from scratch so that over the years, as the market changes and as your psychology changes, you can adapt your system to those changes. Thank you for watching. I hope you've picked up something insightful from this first lesson. If you have any questions, feel free to reach out to me at ahoy@piratetraders.io. Otherwise, we'll see you for lesson number 2.